Think about a new truck or SUV for the business. If it's over 6,000 pounds, you might be able to write off a lot more in year one. By the end of this video, you'll know how the IRS actually looks at vehicle weight, why two vehicles that cost the same can have widely different first-year write-offs, and a simple 10-second check you can do on any truck or SUV before you buy it so you don't leave tens of thousands on the table. I'm Tony Hong, a licensed CPA and founder of the CPA Dude. My firm helps business owners, real estate investors, and high-income earners pay the legal minimum in tax. Every year, my team reviews and files hundreds of business and investor returns, and a big part of our work is structuring vehicles and equipment so clients don't tip the IRS money they don't have to. Quick disclaimer, this is education, not personal tax advice. Always confirm details for your exact situation with your own CPA. All right, so most business owners think if it's used for business, the tax write-off is basically the same. That's wrong. The IRS uses a gross vehicle weight rating, or abbreviated GVWR. And that's to decide what rules you play by. That number is on the label inside your driver's door, actually. All right, so we're gonna compare $200,000 vehicles, both used 80% of the time for the business. So over here, we're gonna have our good old Honda Pilot. The GVWR, how much this car weighs, is 4,900 pounds. And because we use it 80% of the time, the business basis for this is $80,000. On the right here though, we're gonna have a Ford F-150. And the gross vehicle weight on this is 6,200 pounds. Once again, still use 80% of the time, so we're gonna have 80K here for a business basis. For the light SUV, the IRS caps how much Section 179 you're able to take and pushes the rest into slower depreciation, plus you hit luxury auto limits. So year one might look like Section 179 around 12K, and the rest of the $68,000 spread over 5 years. So your total year one deduction is roughly gonna be about $15,000. At a 24%, you're looking at $4,800 in tax savings. Now let's go back up to the Ford F-150 though. For a heavy truck over 6,000 pounds, Section 179 cap is much higher. So what you can do is actually you can do the 179 cap plus bonus depreciation all in the first year. So down here, we're gonna be able to deduct the full $80,000. At 24%, you're saving about 19.2K in taxes. Unlike over here, we're saving maybe about $4,800. This is almost a $15,000 difference. This is the same price on the vehicle up top here. So we had $100,000 on both. We had the same business usage, 80% for both sides, but how fast we were able to get it made the world of difference here. Because on year one, from a tax savings perspective, you're able to only get $4,800 versus over here, you're able to get 19 grand. Like, wouldn't you want $15,000 more back in your pocket? There's nothing shady here. This is just how the tax code's written. And quick thing before we go deeper, if you're a US business owner and a vehicle is on your shopping list this year, this is not something you want to leave to the salesman. The choice between a light SUV and a heavy truck can mean a $2,000 write-off or a $20,000 plus write-off. If you want a pro to run the math for your situation, use the link below to book a tax savings blueprint call with my team at the CPA Dude. On that call, we'll look at your income and profit, review the exact trucks or SUVs you're considering and your gross vehicle weights, and build a legal, ethical, IRS compliant plan so you can pick the right vehicle for your tax strategy, not just for looks. And we keep it super simple. If we don't find at least $3,000 in tax savings opportunities, we refund you what you paid for the blueprint. If that sounds useful, hit the link, grab a time, and let's get back to the mechanics. So let's zoom in on this $100,000 so you really get the details here. So we had two vehicles here, had the same exact cost. They had, both were $100,000. They had the same business percentage use. They were both 80%. So they both had an 80K basis to deduct over time here. But we had two very different paths here. The SUV path that had less than 6,000 pounds. A lot of the deduction of the $80,000 had to go into year 2, 3, 4, and 5. Really slow. But on the truck path here, because it was more than 6,000 pounds, we're able to grab the full $80,000 all in year one. Having the money up front is gonna be way better than having it down the road here. Don't get me wrong though, over the life of the full vehicle, both end up at $80,000, but the difference was just timing. The light just took a long time to get versus the heavy was just all in the first year. And if you're trying to grow, cash this year is far more valuable than the same cash sprinkled over the next 5 or 6 years. All right, so now let's talk about the 3 gross vehicle weights that you need and how you actually check this on a real vehicle. So you're gonna have 3 type of cars here. You're gonna have light, you're gonna have heavy, and the last one you're gonna have is gonna be commercial. So this is gonna be less than 6,000 pounds. And then you can think about this as your Civics, your Camrys, a lot of mid-sized SUVs, 4Runners, RAV4s. These are really treated as passenger vehicles here. And the section 179 cap is real low here, so it's low. And the year 1 deduction is really restricted on this side, so not so great to buy lighter vehicles. Now coming up here, heavy is anything from 6,000 to 14,000 pounds of gross vehicle weight. So this is gonna be your heavy duty trucks, full-size trucks, F-150s, Rams, large SUVs like a Model X or a G-Wagon. And then here's where it gets interesting. Section 179 caps are much higher. Luxury auto limits generally don't apply the same, and you can stack 179 plus bonus depreciation. That's why a heavy truck or SUV can create a massive first-year deduction when structured correctly. And then lastly, commercial is anything more than 14,000 pounds. These are like your big box trucks, your large cargo vans, many dump trucks, especially work trucks. When they're generally used for business, otherwise I really don't know why you'd buy a vehicle that large, those can be fully expensed and they are subject to 179 and bonus depreciation rules. And so how do you check this in 10 seconds? You literally just go into your door, go open it, and then there's gonna be a label on the inside that you wanna look in here and look for the thing that says GVWR pounds. Write that number down and compare it to those 3 buckets to see which one are you in. And do this before you buy, not after you buy, if you're really in it for tax purposes. So next, I'm gonna show you pretty much a checklist that you can follow before you buy your next car to make sure that you are the most tax optimized for buying a car. 1, create a list of the actual vehicles that you wanna buy. 2, find the GVWR. This is what the IRS looks like. Some people just get confused with normal weight, but it's GVWR. Then sort them into the 3 buckets that we had was light, heavy, commercial. Then from here, see what your tax deduction would be based off of that. 5, go find your rate, and then you can multiply that against to see what number 6 would be your tax savings on each vehicle and knowing what is the real cost of each vehicle now. Then lastly is that you may want to check it out with your CPA before you buy, just because I don't think they'll let you return your car. So don't guess, GVWR can easily be the difference between saving $5,000 and saving $15,000 or more per year in taxes. And the final point here is that you can't eyeball this. Most full-size pickups and a lot of big SUVs are over 6,000 pounds. Many mid-sized SUVs are not. Some trims of the same model cross the line one way or the other. So the move is, don't rely on, my buddy said this qualifies, don't rely on the salesperson saying, yeah, it's a heavy truck, you're good. They just want the commission, man, come on. Open the door, read the label, confirm the GVR, then send that plus your expected business use to your CPA and say, for this specific vehicle in this year, with this much business use, what does my year 1 deduction look like? That's how you use the rule the way the tax code is written, not the way the dealership markets it. So here's the takeaway. The IRS does not treat all business vehicles the same. Under 6,000 pounds, you're in the luxury auto box with tighter caps. Over 6,000 pounds, heavy trucks and SUVs can unlock much bigger first-year deductions. Here's what to do next. Click the link below this video, book a tax savings blueprint call with my team at the CPA Dude. On that call, we'll look at your income and profit, review your current and planned vehicles and their GVWR, and build a clear, written IRS compliant plan so you pick the right vehicle or SUV for your tax strategy, not just for looks. And again, we keep it simple. If we don't find at least $3,000 in tax savings opportunities, we refund you what you paid for the blueprint. If we do, you can implement the plan with us or with your current CPA, your choice. So before you sign anything at the dealership, hit the link below, book your tax savings blueprint call, and let's make sure you keep as much of your money as the law allows.